Hello and welcome. You're watching Republic TV and Republic Business. Finance Minister Nirmala Sitharaman has presented Union Budget which sets the stage for Viksit Bharat with strong focus on reform, job creation and for setting the stage for the Viksit Bharat. To talk more on the budget blueprint, we have with us budget makers. We have Mr. Tuhin Kanta Pandey, who is Finance Secretary, and we have Mr. Arunish Chawla, Deepam Secretary. Thank you, gentlemen, for joining us. First of all, many congratulations to both of you for coming up with this reformist budget. So coming to you, Mr. Panda, first. First of all, we know the context in which this budget has been presented in a very volatile global environment. So what were the guiding light and the philosophies that you had in mind when you set out to make this budget?
Well, I think despite the global headwinds, India is one of the fastest growing large economies. But yes, we would like to grow faster. And how would we do that when we have conditions which are as tough as what we have? We have to fire all engines, and that's what Honorable Finance Minister did, is to really broad base our strategy, to have agriculture, MSME, investment and exports, and investments both in people and economy. And also a balance between capex and the balance between how do we bring more money in the hands of the people. So I think a big balancing exercise which has been done in order to push growth, in order to push inclusivity, in order to push demand. Look at the supply factors, because there are a whole lot of reform measures within the budget. Apart from, the big picture, if you see, the budget is full of fuel called reform.
Right. So coming to you, Mr. Chawla, we know that there is no fixed divestment target this year. There is an indicative target of 47,000 crore. So how are you going to go about the investment, because there is no fixed target, and what is the differentiation between indicative target and not having the fixed target?
जैसा कि आपने स्वयं बताया, there is no fixed disinvestment target, or I can say there is no disinvestment target. We have a strategy for creating value for everyone from the public enterprises, keeping in mind the interest of minority stakeholders, which means the Aam Aadmi, the common investors, who have reposed their faith in us and invested their savings with public enterprises. As part of this strategy, we guide and supervise corporate performance. We also guide capital investment. We communicate clearly. We ensure consistent flow of dividends to ordinary investors. And we follow a calibrated asset monetization strategy. And therefore, we look at all this as a composite whole, keeping the market conditions in mind, the appetite of investors in mind. And as part of that strategy, you have to look at all these numbers together, and we are on track to meet them this year. And the next year, our ambition is higher. We are working on it, and you will know it in due course.
Right. So coming to you, Panda, once again, we know that you, we know that you have given what middle class was looking out for, the income tax cut. So I just want to ask, and also the kind of a capex step up the people were in India Inc. was looking at. So there is, some experts are saying there is a divergence from the strategy of giving a push to the economy by giving record capex allocation, and it was more focused on consumption revival. That's how you have gone for the income tax cut. What is the philosophy behind this?
Well, I think this kind of binary is not in order for several reasons. One, if you look at the capex, we have to look at capex two numbers, in fact 3 numbers. The first number is, for the first 2 numbers are in the budget itself, directly in the statement. The direct capex by the government, which is 11.29 lakh crores this year, which is 10% increase over the RE. Then we have second right there is the money which we give in the form of a grant to the states. So therefore it's a revenue expenditure for us, but actually it is spent on capital. Because whole lot of such things are there where goes into capital. For example, it goes into rural roads. Right. It doesn't go into national highway, because national highway we do it. But if we give it to rural roads, it's a grant for us, but it's a capex there. Similarly, Jal Jeevan Mission, right. Pipes supply. We don't construct schemes. We give the money to the states do it. So therefore, that's a capex in the economy. That's not consumed. So all of that, if you really see, and that numbers is right there in the same statement, is 15.68 lakh crore. And that is 17% increase from the RE numbers. Right. Now, of course, you might say that the RE numbers are slightly lower than the last year budget numbers because of certain constraints we could not. But 17% is a very good growth. Right. So therefore, to say that we will say the capex has been abandoned, obviously, we cannot have an increment of 30% year on year. But now we are at a high base. With the high base also, if we give a 17% growth in RE numbers, I think this will be, I would say, a lot of money going into capex as well. But yes, the consumption is important too. And secondly, what are we doing? If we do give 1 lakh crore to the people, they will decide to consume or save or invest at the household level. Right. So we don't decide at the government level. So I think corporates should be happy that a lot of individuals, including themselves as individuals, would decide what to do with their money. And that will be spent in either of these three. It will be either saved or invested or it will be consumed. And it comes back to the economy. So therefore, I would say this kind of an approach which looks at both demand and supply in a balanced way will be a far better strategy to push growth at this moment. That's what we've done.
Right. And so one thing that we also know, the fiscal consolidation, that the track record of fiscal consolidation has been phenomenal. So do you think that the rating agencies are going to factor in the hard work that has gone in for achieving this kind of a fiscal consolidation?
Well, that's a question you should address to the rating agencies. Because our view is that the rating agencies have been unfair. If you look at the methodologies, if you look at the way they have been rating, and there was a paper by Chief Economic Advisor, if you just look at it, there is a great deal of thing in all that. So be that as it may, we will, when we say fiscal consolidation, we aren't really looking at what the rating agencies will do. This is our own belief and conviction. We said that we will do it at 4.5. We actually delivered at 4.4. We said that we will be 4.9 this year. We are there at 4.8. And we said that we will give a glide path going forward in terms of debt levels. And we have indicated that glide path in the FRBM statement.
Mr. Chawla, coming to you, we also know that there was some announcement on the asset monetization front. And as we look at the number, the announcement is 10 lakh crore for between 2025 to 2030. So how are we going to go about the asset monetization going forward?
See, when we talk about asset monetization, it is asset monetization as a composite strategy. It does not mean only what Deepam does. It includes management of assets in public undertakings. It also means management of assets which are public goods in nature, which are created by so many public agencies, public authorities, and so many other special purpose vehicles. It is part, and there are many other special purpose, special investment and things that have been created in the government. This is about everything put together.
Right. So the last question to you. Economic survey has pegged India's growth at 6.3 to 6.8% for this fiscal. Are you bullish on achieving that target as far as growth is concerned?
Well, we'll try our best, and I think the kind of steps which we are taking, it will certainly give a push to growth.
Thank you so much, sir. Thank you, Mr. Pandey. Thank you, Mr. Chawla, for joining us and speaking to us. Thank you so much.